All righty. Good morning, everyone. Thank you for being here at the Multicoin Summit 2024 here in New York City. We've got a bunch of space down here for all of you, and if you're aware, there's also space upstairs as well on the side. So if over the course of the day you want to do the upstairs seating, get the kind of panoramic view, you're welcome to do that as well. Before I get started, I want to send out a couple of quick thank yous to everyone who will help make this event possible, including our team, including our portfolio founders, who you're going to hear from today, and from some of our guest speakers. And I want to give a special shout out and thank you to John Robert and Catherine from our team. They have done a tremendous amount of work to make this event possible. JR and Catherine, thank you very much. Before we dive in, I do have to do a brief legal disclaimer. Please note that this presentation is for educational purposes only. It should not be considered legal or financial advice. However, I am not forbidden from providing medical advice, so if you would like to consider this presentation medical advice, you are free to do so. This presentation is not an offer of Multicoin's investment advisory services and does not constitute an offer to acquire any interest in any Multicoin managed funds. All right, so 2024 was the most consequential year in the history of crypto across multiple fronts, starting with the Bitcoin ETF in January of this year and concluding with the election a couple weeks ago. That's resulted for the first time in the history of our industry, a pro-crypto Congress and pro-crypto president. We have never had that before. In 2024, crypto as an asset class was meaningfully de-risked. It will be looked back upon, I think, as an inflection year. Still to this day, most people around the world, quite frankly, do not take crypto seriously. But with legislation coming from Congress, they're going to be forced to take it seriously. 2024 was also a big year of validation for Multicoin. We've always been thesis-driven, and for the first time in 2024, we can really see the quantitative outputs of our theses playing out in the public markets and public data, especially with regards to Solana and DPIN. I'll touch on both of those here shortly. That's been incredibly exciting, and it's caused us to lean even further into these areas. So that's where I'd like to start our summit today, by looking back on 2024. If we look back on the year, there are 5 clear themes. The first is the emergence of Solana. Solana had an absolutely breakout year. It is today rivaling Ethereum on most major metrics. Second, DPIN also had a breakout year and has become one of the hottest sectors in crypto VC. Third, stablecoins. Stablecoins are the most important application and use case for crypto, and they are going to have large geopolitical implications and be a mega trend in all of tech for the next decade to come. Fourth is the rise of regulation around the world. And fifth is the arrival of Wall Street. So let's jump into these. Ethereum faced its first real stress test with ICOs in 2017, just as we launched Multicoin on October 1st of 2017. At that time, the ICOs were going off left and right. We had CryptoKitties. The Ethereum network gas fees were spiking. It was almost impossible to use the network. And so there was a lot of discussion around how is Ethereum going to scale this thing. The core Ethereum community never really convinced us they had any answers to that question. In fact, 7 years later, we still don't think they have any answers to that question. And so we ultimately began looking for alternative scaling approaches for blockchains in late 2017 and early 2018. Ultimately, we concluded that the optimal way to scale a blockchain is not via unforecastable research breakthroughs, which is the route that Ethereum has chosen to go, and instead to focus on known engineering optimizations that can ultimately benefit from Moore's Law, as you can see here. Rather than, to that end, Solana was and remains, we believe, the best way to bet on Moore's Law in scaling these systems. There's a lot of technical innovations in Solana, but to crudely simplify it down into one thing, you can think of the core thing Solana betting on as a bet on parallelism, which is all of these CPUs and GPUs today are massively multi-core. Nowhere is this more evident today than if you look at AI. All of these big GPU clusters you hear everyone talking about for NVIDIA, all of these systems are massively parallel systems. In 2017 and 18, parallelism was not a super common term in crypto circles, but it today is the foundation of basically all silicon innovation across all hardware. Prior to 2024, our views were borderline heretical in the industry, but we thought that our perspective was the first principles correct one. Today, I would not say our views are necessarily consensus, but they are at least certainly being taken a lot more seriously by most investors and builders in the space. Solana is now rivaling not only Ethereum L1, but all Ethereum and all of the L2s combined on most major on-chain metrics, including all of those listed here. Hopefully all of y'all had a chance to do your homework and watch the presentation I gave a couple months ago at Token 2049 in Singapore. In that presentation, I made the argument that Sol will flip ETH on most major, Sol will flip ETH by market cap because Solana has a very clear and unwavering vision to be decentralized NASDAQ. This contrasts to Ethereum, which is existentially lost. Last week, the Ethereum community had their annual developer conference called DevCon, and they laid out their vision, their technical roadmap for the years to come. Their goal is to get down to 4-second block times by 2028 or 2029. Today, Solana is running at 400 milliseconds. Since my presentation a couple months ago, the case for Solana to flip Ethereum has only strengthened. Today, Ethereum really lacks a North Star, and the core stewards at the Ethereum Foundation fundamentally do not care about users and developers. They've had many, many years to listen to the users and developers and give them what they want. But instead, they are guided by their own ideologies, and they're building Ethereum into what they want Ethereum to be. Unfortunately, that's just not what users and developers want. We almost never make concrete, time-specific, falsifiable predictions in writing to our LPs, but we did that earlier this year in our letters to y'all. Earlier this year, we predicted that Solana would flip Ethereum on most major on-chain metrics by the end of the year. With 6 weeks to go in the year, I think we can say with confidence that prediction turned out to be correct. We think it's only a matter of time before Solana is going to flip Ethereum on the penultimate metric, which is market cap. We have a price chart here of Sol not against US dollars, but against ETH. Today, the price of Sol ETH is at all-time highs. Despite the clear quantitative and qualitative evidence we have, Sol is still only trading at about 1/3 of the market cap of ETH. We believe Sol remains significantly mispriced by the market, and over the last year, we have consolidated our exposure around Solana. We sold all of our exposure to Ethereum and all of its L2s and all Ethereum-based applications. We also then turned around and we bought over $100 million of locked Solana tokens from the FTX estate at a price of $64. We've also been then increasing our exposure to Solana-based applications, including Jito, Drift, DeFi, Camino, and others, and you'll hear from a bunch of those teams later today. We have historically been ahead of the market, and we believe that we're particularly well positioned both with our core Sol position and Solana-based applications as we think Sol is going to move towards flipping ETH in the year to come. Second major theme I'd like to highlight is DePIN. DePIN, we helped pioneer the DePIN category with our first investment in Helium back in 2019. Helium proved that you can design a system to coordinate and incentivize hundreds of thousands of people all over the world to build physical infrastructure for a coherent vision. It is the first of its kind, and it has truly sparked a wave of entrepreneurs all over the world to follow in Helium's vision and footsteps. This year, DePIN exploded and has emerged as a standalone sector within crypto. There are now hundreds of teams all around the world that have raised venture capital funding. We're seeing a new crop of talented founders with deep domain expertise in areas like energy, drones, CDNs, and more who are building really cool crypto products around the world using this DePIN model. Our experience with Helium, Hivemapper, and Render, which are three of the largest DePIN tokens by market cap, has really put us in the pole position to be the right partner for founders moving forward. DePIN is particularly important for 3 reasons. First, it represents a new model for capital formation. It was simply impossible before to get hundreds of thousands of people around the world to coordinate on a single vision in which all of those people had to outlay cash and take on some sort of risk before you could ultimately get to that vision. DePIN has actually unlocked a new way to facilitate capital formation, and it's really cool. Second, DePIN takes place in the real world and has very obvious and clear economic benefits. I love crypto as much as the next guy, but the reality is that DeFi is fundamentally abstract. Most people in the world don't think about financial rails or care about DeFi protocol design and risk management in these systems. But DePIN is obvious and tangible and direct in a way that DeFi is not. And so it helps legitimize crypto in the eyes of the masses. And the third is that I think the vast majority of DePIN, probably 90% would be a conservative estimate, is on Solana today. We helped push DePIN in this direction and has ultimately helped make DePIN happen and has helped make Solana the home for DePIN. This is only possible because Solana facilitates high-scale micropayments. There are now enough Helium mobile hotspots around the country that the major US carriers are offloading data onto the Helium network. This includes AT&T, Verizon, and T-Mobile. What this means is that if you're in anywhere in the US in which your cell phone carrier does not have great coverage, but there's a Helium hotspot nearby that does, your phone will automatically roam onto the Helium network and use that hotspot instead. This is live today and happening. A few 100,000 people per day are now experiencing this. Obviously, they don't know it's happening, but it's happening. On the back end, the telecom carriers are then paying the Helium team and the Helium network for all of this to happen. What's great about this, of course, is that with this infrastructure in place, you can scale demand dramatically from here. We expect crypto-powered telecom is going to scale a lot in the years to come. Next, I'm going to talk about HiveMapper. HiveMapper drivers have mapped more than 17 million road kilometers over the last 2 years. For context, there are 64 million road kilometers in the world. So HiveMapper has mapped more than 25% of the world's roads in 2 years. That is absolutely spectacular. They're doing it way faster than Google ever did, and they're doing it with a dramatically higher refresh rate than Google ever did. Obviously, Google only has a few hundred cars around the world. HiveMapper has about 50,000 cars now. The big mapping companies, of course, need data from HiveMapper to build out their maps. The very first HiveMapper customer is a company called Here Maps, and it is a consortium of the German auto companies. Think Audi, BMW, Daimler, those kinds of folks. They started buying HiveMapper data for LA a few years ago and have started ramping that up. We see the same pattern playing out with more and more of the HiveMapper customers. We're going to hear from Ariel Seidman, the founder and CEO of HiveMapper, later today. He's going to talk about the details of what they're doing. And the last DeepIn example I want to highlight is IONET. IONET is a crypto-native neocloud, or what we now call an icon, that aggregates latent GPUs from long-tail data centers around the world. Since launch earlier this year, there are more than 300,000 GPUs that have joined the IONET network. Customers range from big enterprises through startups like Kreia and others. We continue to be excited about the intersection of AI and crypto, and we've made several investments in this area, including IO and Cusco. My partner Shayan is going to be talking about the economics of data centers and how these GPU markets work later today. Third major category I'd like to talk about is stablecoins. Stablecoins had an outstanding year. Exporting US dollars to everyone around the world is going to be one of the great opportunities of our lifetime. And it's going to be done via stablecoins on crypto rails. Stablecoins reached an all-time high in market cap this year, and there are now more than 100 million people holding over $178 billion worth of stablecoins around the world. Stablecoin issuers like Circle and Tether are actually some of the largest holders of US treasuries in the world, having even more treasuries on their balance sheet than major sovereigns, including Mexico and Germany. No matter where you look, every stablecoin metric is up and to the right. Stripe recently acquired a company called Bridge for more than $1 billion. Bridge is a company that builds stablecoin APIs, and today investment in stablecoin APIs is ramping up aggressively among fintechs, banks, tech companies around the world. Everyone's recognizing that this wave is about to hit in size. Speaking of Stripe, Stripe had their annual developer conference called Stripe Sessions earlier this year. And at Stripe Sessions, Stripe co-founder and president John Collison gave a presentation showcasing their new Pay with Crypto product. At that presentation, he actually demoed USDC on Solana. And he went out of his way to call Solana new crypto that's fast and cheap. And he was implicitly contrasting this against old crypto, Ethereum, which is slow and expensive. Pay with Crypto is live today, and more than 1 million Stripe customers around the world can now turn this feature on if they so choose to. Stablecoin acceptance among merchants is going to ramp up dramatically because of companies like Stripe. Meanwhile, both Visa and PayPal continue to build out their own stablecoin initiatives. We're going to hear from Kai Sheffield, the head of crypto at Visa, later today. They've been fairly quiet about what they're working on, but they have a bunch of really cool initiatives in the works. PayPal has been a little bit louder, and they actually launched their own stablecoin earlier this year called PYUSD. Today, there's more than $500 million outstanding in PYUSD. Stablecoins are one of the most important tech megatrends of our lifetimes, and there's going to be a tremendous amount of growth and investment opportunities, not only directly in the infrastructure, but then in ancillary applications around those. I'm going to touch on some of those subjects in my next talk after this. Fourth major theme of 2024 is regulation outside the US. We don't have anything in the US just yet, although I think we're getting close. The EU passed a major law called MiCA in April of 2023, and the first part of MiCA went into effect on July 1st of this year. Circle announced full compliance with USDC a couple days later. The second part of MiCA will go into effect on January 1st of 2025, and the EU is already now working on MiCA 2. The EU recognized where the US was quite frankly falling short in regulation, and they went out of their way to get actually fairly progressive and generally pretty good legislation passed to encourage entrepreneurs and developers and companies to set up shop and build there. The EU, UAE and Singapore also recognized the same thing, and they also passed comprehensive legislation in their jurisdictions as well. And today, the UAE and Singapore are two of the largest hubs for crypto around the world. This is precisely why Solana had their annual developer conference Breakpoint in Singapore a couple months ago, and why their next one is going to be in Abu Dhabi next year. And the last major trend I want to highlight from 2024 is the arrival of Wall Street. Wall Street showed up in size. The most important thing that happened on this front was, of course, the Bitcoin ETFs in January. Since then, the Bitcoin ETFs have become the most successful ETF product launches in history by an absolutely gigantic margin. And that ETF's been around for about 31 years now. Just last week, BlackRock's Bitcoin ETF surpassed their gold ETF in total assets under management. That means Bitcoin has accomplished in 1 year what gold did in 20. The demand for Bitcoin ETFs is not only, it's truly off the charts, and it's accelerating. And what's pretty amazing about this is that, yes, you can go buy IBIT in your Goldman Sachs or your Morgan Stanley account, but none of the advisors at these firms are yet actively promoting crypto as part of their allocation for their clients. It's still so early. In less than 1 year since launch, Bitcoin ETFs have accumulated more than 5% of the entire Bitcoin supply of 21 million tokens. While the Bitcoin ETFs are obviously great for prices and they produce a lot of headlines, they are explicitly operating on the old financial rails. The thing we really look for as a leading indicator is not just, hey, is BlackRock making money because IBIT is trading on NYSE, but is BlackRock actually building stuff on-chain natively? BlackRock launched their BITL product, which is a natively on-chain product, earlier this year, and that fund has amassed more than $500 million in assets. All of the other logos you see on this slide have all announced products and are moving in the same direction as well. They all see the opportunity ahead. Most of these guys are starting on Ethereum first, and they're all basically adding Solana support later. There's a bunch of cool features on the Solana blockchain called token extensions that make it really good for asset issuers like these to scale up their fund assets on chain. You'll hear more about this from Matt and Raj later today at the Solana team. To that end, Tushar actually did a podcast earlier this year with one of our LPs who's here, Ray Hindi from L1 Digital. Ray, thank you for flying here. And they really broke down the dynamics between liquid and crypto venture. If you all want to scan that QR code, it's a fantastic podcast. If you want to listen to it, I'll give you all a couple seconds to scan. All right, next I'd like to talk about what to expect in 2025. In the immediate term, I'm going to go 6 major items here. In the immediate term, let's talk about the active crypto companies today, most notably Coinbase and Robinhood. Both Coinbase and Robinhood have become very aggressive in the last couple weeks. Robinhood relisted Sol after delisting it in 2023, and Coinbase has been aggressively listing meme coins. Chairman Gary Gensler is expected to leave the SEC, and he is signaling that he probably will do so. Third, we are expecting some new appointments in the cabinet, specifically SEC, CFTC, and Treasury. We're generally optimistic that we're going to get people who are substantially more crypto favorable in those roles than their counterparts in the Biden administration. We obviously don't know who those folks are going to be just yet, although we should learn pretty soon. But again, we're optimistic things will get better. Fourth, let's talk about the Bitcoin Strategic Reserve. I know a lot of y'all have been wondering about that. We think it's pretty unlikely that Congress is going to authorize open market purchases of Bitcoin. Broadcasting that you're going to buy openly is just hard to do. I don't think we'll get there. President Trump has, of course, been talking about a Bitcoin Strategic Reserve for a little while now. I think it's quite likely he will do so not only as a candidate and as president-elect, but as officially as president. That seems like it's going to happen. There's a real chance that Congress may formalize that as well, in which case that you could expect that reserve to persist even after a Trump administration, but we'll kind of see there. Fifth, legislation. This is a big item. We think we're going to get 2 pieces of legislation through the next Congress and administration. One is going to be around stablecoins and one around market structure. Again, all indications are from the Trump, Vance teams and others that they understand the industry wants this and needs this and are going to get it done. I know betting on things going through Congress is usually a pretty poor bet, but we're optimistic it's going to happen. And then the last item is, of course, the Solana ETF. The short answer is yes, Solana ETF will happen. It's just a question of timing. The more pro-crypto the SEC chair is, the faster it can happen. Most people on the internet probably will tell you they think it's 2025. We think it's a higher probability of 26, but 25 is definitely on the table. As you can imagine, we're spending a lot of our energy and effort on this item specifically and are trying to create a framework not only to get a Solana ETF, but to have an objective and repeatable process so that all crypto assets can ultimately have a path to getting to an ETF. To that end, we're going to continue our efforts in Washington, D.C., working with elected officials and their staff, and of course White House agencies and their staff. We're educating folks and helping them understand these systems from first principles. I was in DC last week, and we already have several trips planned back to DC in the months to come. And lastly, we're rolling out a new policy blog on our website that's going to launch later this month, along with a separate policy blog that'll be separate from our blog that a lot of y'all read. This blog is going to go in-depth in policy issues to maximize our efficacy with these key stakeholder groups around the world, around the US, and also going to help us attract entrepreneurs whose businesses are relevant to these policy issues. We understand that we are stewards of the industry, and we want to make sure that we can get the best regulation and legislation in place. Right now is a pivotal moment in time for the industry at large. We know that, and we need to do everything in our power to maximize the outcome. Getting updated legislation through Congress, in 2027 or 8 is going to be very difficult, and so, not impossible to have a second shot, but the first shot really matters here. And so we're spending excess energy on maximizing that today. All right, to wrap up the opening remarks, I want to talk about what you can expect later today for the rest of our agenda and why we invited these folks to join us. I think we have the best content lineup at the summit this year than we've ever had, and we've also kind of gone out of our way to help you all use the content to understand how we're thinking about evolving the portfolio and what we think are some of the coolest opportunities in the space. I'll kick things off after this by diving deep into stablecoins. Again, as I mentioned, stablecoins are one of the most important opportunities of our lifetime. Next, Tushar is going to dive deep into MEV. 2 years ago at the Multicoin Summit, Tushar provided a framework on how to value asset ledgers like Ethereum and Solana using MEV. Today, he's going to build on that foundation and talk about our evolving views on MEV up and down the stack and how these different parts of the system are going to capture value. MEV on-chain today is at absolute all-time highs, and the Solana network today is capturing more than $3 billion of annualized revenue. So this is particularly timely. After that, Tushar is then going to interview 3 of our portfolio companies who are building at different layers of the MEV stack. Those include Lucas, Nitesh, and Giant from Pith, DFlow, and Jito, respectively. Then we'll have the mid-morning break. After the mid-morning break, I'm going to be hosting U.S. Senator Bill Hagerty from Tennessee for a fireside discussion. We're super happy with the efficacy of our dollars invested, very happy with Senator Hagerty and the work he's done and the rest of the Sentinel team. After that, we're going to do 2 Solana-focused presentations going into lunch. The first will be a presentation from Matt Sorg, who is the VP of Technology at the Solana Foundation. Matt generally stays fairly below the radar, but he has one of the most important roles at the Solana Foundation. He specifically helps drive prioritization of which features get implemented in the system. He interfaces with lots of third-party teams like Jito and others, and he's helping guide the evolution of FireDancer, which is Solana's next major upgrade. And our last fireside before lunch will be with Raj Gokal, co-founder and president at Solana Labs. Raj doesn't need much of an introduction, so I'll leave it at that for him. After lunch, Spencer is going to share some of our refined thoughts on risk management and protocol design in DeFi systems. For those of you who work in finance, this is going to be a really cool presentation. By unlocking regulatory constraints and moving everything in risk management and finance to pure software, we can actually see 2 different models of risk evolve in these DeFi protocols. Spencer's going to unpack those 2 models and how they both evolve and coexist. Right after that, we're going to hear from David Liu, who's the co-founder of Drift, which is one of our investments. And Drift is one of the largest derivatives dexes in the world and one of the flagship applications on the Solana blockchain today. Drift very much is going to encapsulate one of those 2 approaches from Spencer's presentation, which we kind of call the super protocol approach. After that, we're going to hear from Kai Sheffield, who's the head of crypto at Visa. And he's going to do a fireside talking about stablecoins, payment networks, and Visa's role in all of this future. Again, Visa's been pretty quiet about everything they're doing, but they've actually been doing a lot, and Kai's going to share some of that with you later today. After that, Shayan is going to tackle what we believe is the most important question at the intersection of crypto and AI, which is around GPU marketplaces and the economics of data centers and how all of this can work. And the last fireside before our afternoon break will be with Ariel Seidman, the founder and CEO of Hivemapper. As I mentioned earlier, Hivemapper is absolutely crushing it, and Ariel is going to give you all a deep dive into everything going on at Hivemapper. After the afternoon break, we're going to sit down with Austin Federa, who recently left the Solana Foundation after 4 years to found the new initiative called Double Zero. Double Zero is one of the most technically ambitious endeavors we've seen since launching Multicoin. Double Zero is specifically aiming to make the internet go faster. It's an incredibly awesome initiative, and Austin's going to tell us about all the work they're doing. After that, our general counsel, Greg Exathalis, is going to host a panel discussion with Rebecca and V to talk about the post-election regulatory environment from crypto. Rebecca and V are two of the leading general counsels in the space at Anchorage and at Polygon, and they're going to share their thoughts on the ground dealing with the issues in the real world. Greg has helped us change the firm's policy agenda over the last few years, and we've had a front row seat to the legal regime change that I just talked about a couple moments ago. As we approach the end of the day, we're going to then focus on consumer applications. To that end, Vishal on our team is going to share some of our thoughts on how crypto can actually help design and build better and more efficient consumer marketplace businesses. And then we'll wrap things up with one of those consumer marketplace businesses from Todd Weasel, the founder and CEO at Baxis. Baxis is a consumer marketplace focused on a very fun and interesting little niche, whiskey. And he's going to tell us about Baxis and how it works. All right, with that, we can wrap up the opening remarks. I'm going to be back on stage, but I'm going to have some water, and we'll get started here in just a minute.